Introduction. Taxation plays a crucial role in the real estate sector of any country, including Pakistan. Various taxes, such as capital gains tax, withholding tax, and stamp duty, are levied on real estate transactions. This video aims to provide a comprehensive overview of the taxation of real estate in Pakistan, highlighting the rates, exemptions, and relevant sections of the Income Tax Ordinance 2001 and Stamp Duty Acts of Sindh, Punjab, Khyber Pakhtunkhwa, and Baluchistan. It will also include the latest updates on these matters. Capital gains tax. Capital gains tax is applicable when a property is sold, gifted, or transferred. The tax is calculated based on the profit earned from the sale. According to the Income Tax Ordinance 2001, the rates for capital gains tax in Pakistan are as follows. Holding period rate of tax for tax year 2023 and onwards. Not exceeding 1 year 15%. Exceeding 1 year but not exceeding 2 years 12.50%. Exceeding 2 years but not exceeding 3 years 10%. Exceeding 3 years but not exceeding 4 years 7.50%. Exceeding 4 years but not exceeding 5 years 5%. Exceeding 5 years but not exceeding 6 years 2.50%. Exceeding 6 years 0%. Withholding tax. Withholding tax is deducted at the time of payment for various real estate-related transactions. The rates for withholding tax vary depending on the nature of the transaction and the stakeholders involved. According to the Income Tax Ordinance 2001, the following rates apply. A. Sale of property. Individual seller, 3% of the gross sale proceeds, Section 236C. Seller other than individual, 3% of the gross sale proceeds, Section 236C. B. Transfer of immovable property through gift, inheritance, or disposal. Individual recipient, 3% of the fair market value, FMV, if the property is within a prescribed area, otherwise 3%, Section 236K. Recipient other than individual, 3% of the FMV if the property is within a prescribed area, otherwise 3%, Section 236K. Stamp duty. Stamp duty is levied on most legal documents related to real estate, such as sale deeds, lease agreements, and mortgages. The rates for stamp duty vary across different provinces. Here are the rates applicable in each region. A. Sindh, as per Sindh Stamp Act. Urban areas, 4% of the property value, Section 3(1)(a). Rural areas, 3% of the property value, Section 3(1)(b). Exemptions. Certain transfers, such as gifts to family members, may be exempted from stamp duty. B. Punjab, as per Punjab Stamp Act. Urban areas, 5% of the property value, Section 27(1)(a). Rural areas, 3% of the property value, Section 27(1)(b). Exemptions. Stamp duty exemptions are available for transfers between close relatives and agricultural land. C. Khyber Pakhtunkhwa, as per KP Stamp Act. Urban areas, 4% of the property value, Section 27(1)(a). Rural areas, 2% of the property value, Section 27(1)(b). Exemptions. Certain transfers, such as inheritance and gifts to family members, may be exempted from stamp duty. D. Baluchistan, as per Baluchistan Stamp Act. Urban areas, 3% of the property value, Section 27(1)(a). Rural areas, 2% of the property value, Section 27(1)(b). Exemptions. Stamp duty exemptions may be available for certain transfers, such as inheritance and gifts to family members. Taxation of real estate in Pakistan. Capital gains, withholding tax, and stamp duty. Conclusion. Understanding the taxation of real estate in Pakistan is crucial for individuals and entities involved in property transactions. This video provided a detailed overview of the taxation aspects, including capital gains tax, withholding tax, and stamp duty, along with the applicable rates and exemptions. It is important to consult updated versions of the Income Tax Ordinance 2001, Stamp Duty Acts of Sindh, Punjab, Khyber Pakhtunkhwa, and Baluchistan, as tax laws can be subject to changes and amendments by the respective authorities.